take it away, Mr. Powell.
Thank you, Mr. Murphy. And just to make sure both items are actionable,
Yeah.
right, we will have to have some kind of action tonight on it because the main reason is the policy is due April 1st. So we'll have this meeting and hopefully we can go into consent on the 18th and then have all this settled and to be able to have everything in place for that April 1st review. So agenda 1 is consider property insurance policy renewals coverage for April of 2025. So I wanted to give some history first of where we currently are with property insurance coverage and premiums, and then get into what our new policies look like and how that process works. So current for 2024 through Hughes Insurance, our total insured value, which we call the TIV, that's a lot of times we throw acronyms out, we want to make sure everybody understands what it is, was $729 million, almost $730 million was what the total insured value was. We had $100 million of all risk, excluding flood and quake. Sublimit for a named storm is at $10 million. And that premium was $2,349,000, a little bit, at a 7.5% deductible. That's the facts. That's where we were for 2024 and starting into this year for the approval. Some of the changes that happened in 2025, we put out, opened up Prairieville High School at a value of $117.9 million that has to be put into this property value. We did it earlier, and there was a supplementary value that came in that we brought to you guys and approved. That was through some other mechanisms. And then, so the total insured value now is almost $850 million with the addition of Prairieville High School. So the next slide, what I'm going to show you is what we asked Brett to come back with was apples to apples. Show us what the $100 million and $10 million named storm was at 7.5%, and how did Prairieville High affect that. Wanted to be able to show y'all that as a committee. So part of the process for Brett to get to that point is we can only get quotes, I don't want to speak for Brett, but about 30 days before time. So renewals, if we're lucky. So renewals being April 1st this year, we didn't get quotes until I think we seen them Thursday or Friday of last week. They started coming in right at the beginning of March. So it does seem kind of quick. That's one of the main reasons we scheduled the meeting for tonight, because we were down one meeting. But it happens very, very fast. It's very quick. If you got questions, you've got Brett here to answer about that process. So when we got them in for 2025, the total insured value changed with the baseline of Prairieville High School at the same coverage, $100 million and $10 million named storm at 7.5% deductible. The premium goes to $2.59 million, which is an increase of about $240,000. So that's sort of the new baseline. That sets everything back because we're obligated at that point to make sure we insure that Prairieville High School at $240,000. So everything I'm going to talk about after that, with some options that Mr. Hughes brought up to us, starts at that $240. So I'm going to show you the values over $240. Just remember, it's as a budget impact for last year to this year, it's in addition to the $240. Just make sure we kind of understand that from a math standpoint. Very hard to kind of put all these together. Y'all should have seen the spreadsheets. They were
Say that again.
They were bright.
Please say that one more time.
Yeah, so the baseline is 240. So the numbers you see in front of you on this chart are, I'm gonna go into one for instance, Jake. So 100 million and 10 million named storm at a 5% deductible brings a premium of this year to 2.615 million. That's an increase of 25,000 on top of the 240.
Right.
Okay, so it'd be like a 265 kind of increase, if that makes sense. So going from where we were in 2023 to 2024, or 24 to 25.
Where's the 240?
With Prairieville.
With the
The 240,000 is changing our total insured value from where it was last year at 700.
Oh, I see.
Yeah,
to 800.
it
So we're
adds.
increasing it by 117 million.
Right.
That to insure that 117 million basically is costing us 240,000.
So that's our new start line.
So that's what we call the new baseline.
That's the new baseline.
We're obligated on that, and then so I'm gonna show you three options.
And before you do that, let me just add too, just so you'll know, the actual rate that we're being charged per $1,000 of coverage, that is down 5% on this scenario, and it's almost 15% on the other scenario we're going to look at. So the rate itself is less than last year. The reason for the increase in premium is the additional $117 million of coverage.
Right, that part.
That's the first time in 3 to 5 years that we've seen rate reduction when it comes to property insurance.
Right.
So that's a positive sign going forward.
In some places, it was almost 10%.
Yes.
Right. So I guess overall, there was some price reductions, but when we added Prairieville High School, it made the increase because it was so much. So getting into the options that are available for you, the first one again, 100 million at 10 million name storm at 5% raises it 25%. What I would, or 25,000. What I would tell you is I'm comfortable there, right? It makes sense to go from a 7.5% deductible to a 5%. If something does hit, that's a pretty good chunk of change, even millions of dollars.
Just to use Prairieville High School as an example for that deductible, at 7.5% on 117 million, we're about 8.9 million. At 5%, we're about 4.9 million, 3.9 million. So it's a savings of about $3.5 million if the worst case scenario would happen to just that one campus. So if that 25,000 in additional cost, if anything in insurance is considered to be a no-brainer, that would be about as good a one as you could possibly get.
That sort of makes sense. So from my standpoint, that's a good thing for us. That needs to be considered. The next two are really risk tolerance to the committee and to the board. How y'all feel, what you want to handle from us from an insurance standpoint. I did check with our consultants as where we're at from a FEMA standpoint, and we are good from a property insurance. As you know, where we're at, if something does happen from a FEMA standpoint, we have acquired what's reasonable and given to us and affordable to us. This reaches that threshold, okay? So anything.
Okay, it was just stop him. You said right now, and we just, okay, the 25,000 is just a decrease in the deduction.
Just the deductible.
Just the deduction.
That's
That's all we do.
That's it,
Okay,
yeah,
okay.
that's all
Now,
we do.
now, if we add this other two
15
things,
million.
this is
15
a
million.
decrease in what?
Well, it's an increase in premium and an increase in name storm. And I'll
Okay.
Yeah, let me go through them real quick, then I'm gonna kind of turn it over to Mr. Hughes so he can go. So when Brett and I were talking about it, the 7.5% and 5% deductibles was the apples to apples. So that's kind of why you're seeing it that way. So the first option was the 100 million and then 25 million name storm at 7.5%. That's an increase of $357,000 to go to that 25 million in name storm. And then at 5% percent for deductible, it's that 25,000 again. Basically, that stayed the same, but from the 5%, 7.5% on the 10 million, stayed the same on the 25. So that's kind of the numbers that are in front of you. And once again, I feel after talking with Brett that it is a risk tolerance. Where y'all feel as a committee and a board, where do you want to be from an insurance standpoint? I just felt I needed to say that from a FEMA standpoint, we have the minimum amount required at the 100 and the 10. And that's from a FEMA standpoint, that's all that is. That doesn't mean they're coming and they have all the money in the world to help us if another disaster comes through. It's just what the obtain and maintain numbers come out to be, so.
Can I ask a quick question just for budgetary things? So where you have the increase of $240,783, then the next three lines we just add, right? So if we choose the first line, we add 25, the second line, we add 357, and then the third line, we add 382 to the 240.
To the
Okay, I just
Yeah, it's
wanna
not
make sure.
cumulative all the way
I
down,
got
I'm
it.
sorry.
I just wanna make sure.
And look, I apologize in advance, to get it to this level in about 24 hours was tough.
So
No,
you
I
tell
think
me-
it's great.
Okay.
No, I think it's great. I just wanna make sure I'm understanding.
Yes,
Me
ma'am.
too, I just want to, so you tell me if we only add 15 million to the deductible, we paying 357,000?
At 7.5%, so.
Not
Yeah,
deductible.
not deductible.
Not deductible.
If
Not
you add-
deductible. I'm
if you
saying
add an
you just-
additional
you-
15 million
15%.
of name storm coverage, just keep in mind, we have 100 million of basically what's called all other perils.
So I'm just saying, we paying 15 million, we paying that's extra 357,000.
Correct.
For 50 million
No.
coverage, for
To
50
me,
million
hang on,
extra
hang on.
coverage.
No.
15 million.
382, because that 7.5% deductible needs to go away for $25,000.
Yeah, you need to be looking.
I'm okay with that.
Yeah.
Oh, okay, that I'm okay with, I have no problem with that. I'm looking at the 15% for the, I'm okay with that. Because I'm looking at the 15% with an extra 597,000. Is that correct?
240 plus.
240
plus
plus,
the 382,
yeah.
like 620.
I mean,
Yeah,
620 for the
620.
third one,
Yeah.
yeah, for the third one.
Correct, yeah.
Oh, no.
Yeah, your budget impact is
Oh, okay,
622.
I don't know, okay, I'm fine.
One clarification too, Brad, you talked
Yes.
about like a total worst case with, Prairieville, and I agree with what Mert said, the 25 is a no-brainer. I mean, that's, that's the only ones we should be looking at in those categories, but, with only 100 million, even though it's worth 117, the maximum we could get is 100, right?
Oh, no, we can get more than that on all of the peril coverage.
I'm saying if we choose one of these.
These options, we're keeping the all of the perils at 100 million. We can increase that if you, keep in mind, last year we went from 50 million to 100 million on all of the perils.
Right.
That was the change we made, and we kept the 10 million where it was. This year, we kept the 100 million all of the peril, because the likelihood of it being totally destroyed is not great,
No.
but it could happen. So yes, we do have a $117 million canvas insured for 100 million currently when it comes to a tornado. We can increase that, it's not a problem, but we looked at more of, because I still think we're vulnerable at 10 million based off of 860 million in names, in TIV value, which honestly is closer to $1 billion when you really start looking at it. They're allowing us to insure it for less than that, because you don't have to insure it at 100% to get replacement cost. What I'm concerned with, and Jeff and I talked about it the other day, and Lewis and I were talking about it a while ago, what I don't want to happen is what happened in 2016, when, actually I guess it was prior to that, but the first time we had the flood, that we had campuses damaged, maybe it was 16, where we didn't have them all insured, and the ones that they came in and made us get insurance on, you have to cover them to whatever amount you were reimbursed at. Well, if FEMA comes in and says, hey, we're gonna give you, from a property damage standpoint, a wind damage standpoint, 75 million for Prairieville High School, well, guess what? They're gonna force us like they do on flood, I'm assuming, Lewis, and you can help me out, to cover now Prairieville High School for $75 million. We only have 10 million total right now, and it's costing us this much money. Can you imagine what it would cost if they force us to do that? So my point is, how can we best, assuming what the risk tolerance is, get to a level that we're comfortable with, we think this might be worst case scenario from a wind damage standpoint. 25 million is much better at that standpoint than it is at 10. Because we can easily get a $10 million or more damage, if you will, to Prairieville High. The likelihood of 25 million gets much more remote when you're looking at just wind damage, non-hurt, non-tornado.
In
That's the
normal
reason that we
cases-
started looking at that instead of increasing the all other peril limit from 100 million.
In normal cases, insurance picks up anything that FEMA don't pay, right? FEMA pays first and then insurance?
Insurance first.
Insurance is going first.
Yeah.
Insurance is first, the FEMA's gonna come in after that. Yeah.
Yeah, we have to exhaust all insurance first, and then FEMA.
And just to add on kind of, we talked about the layering last year, and without getting into all the towers and layers and who's participating, because that's not the important part. The important part is, what's the amount of coverage we have? Not only did we have some rate reduction this year for the first time in several years, this is the first time in a very long time where we actually have insurance companies, not to use the word begging, but basically really wanting to participate in that layer. Because they are looking at capacity issues in South Louisiana and saying, hey, we can add some capacity here. The likelihood of greater losses is not as risky as they thought it would be at times. So the capacity has changed drastically. That's allowed us to go in and get companies to participate in a layer to get us to that 25 million. Once you start to do that, and this is behind the scenes type stuff from our side of it, we want to try to keep them involved, if you will. We don't want them next year to come in and say, well, no, we're not going to participate. And so if we keep it at 10, Jeff could be completely accurate. FEMA might say, yeah, you're good at that, but you're not good at that if the loss is much greater, and now they're going to make us cover it for even higher. And that's the concern going forward by leaving it at 10 million. From my standpoint, as your insurance expert or professional that you rely to come to you and say, hey, here's what we can possibly do. And that's kind of why we got to these options and didn't look at let's increase and spend more money on the AOP portion of the 100 million. Because I truly feel that the 100 million and the 25 million, if we would go to that, you're good for several years. It's not going to be another discussion next year, the year after. Hey, now we need to get to 50. But if we stay at 10, we're going to always have to look at that as an option. and the rate this year is just so much better. To give you an idea of that, that 100 million, 25 billion option at 7.5%, which is 2,947,000, which we wouldn't do because we would want the 5, but that's what it was last year, 7.5. That would have cost you 3,228,000 last year, compared to the 2,947,000 this year. So you can see how the rates have gotten to the point where more companies are interested, and when you get more companies in, competition is greater. Now they're likely to do it at a less rate, and that's kind of where we are right now.
Go ahead, Mr. Lamb.
What, couple foundational questions. So total insured value.
Mhm.
I think we talk about this every year, but, so that is dictated by the industry standards of how they come up with that, or is that information that we?
Yes and no.
provide?
It's actually, on our case right now, is more dictated by us, by staff, by them saying, hey, here's what our limits are, we feel like on these buildings. We take that spreadsheet every year and we send it to, in this case, Tony Greer with US Risk. They look at those buildings, look at this, because the spreadsheet we have has, you
All the
name it, it's got all the
details.
details of
Yeah.
it. They look at that, and if they're okay with it, they'll say, hey, we're good with the 847 million, which they were this year. If they weren't, they would come back and say, hey, this particular building is underinsured based off of what you're telling us, increase that to whatever.
Right.
We haven't had them do that in a few years.
So just to follow, be clear, so Prairieville have 117 million, for example.
Mhm.
That is exclusive of the real estate, the hard surfaces, that is for the insurance of the
Building
buildings,
itself, the buildings.
And content?
Nothing.
ball
content.
fields.
Ball fields and all that are separate. Yep.
Okay, all right, just wanted to make sure.
Now, we have the structures at the ball fields, but the dirt, nothing to do with that at all.
Okay, just so we clear, even though the whole project cost was
So that hardly.
right there,
That was
but
just
this is.
That was the
now you don't
construction
want-
cost.
Well, no,
Like what the
118 was total.
replacement value would be, right?
Including the land?
So then you,
That's what I'm saying.
Building
Yeah.
on it.
yeah, so then you think, all right, just talking about the $100 million coverage. You think about it in a couple of different ways. So you could have a tornado that could hit and wipe out a campus,
Mhm.
right? $100 million campus. Well, at least one $100 million campus.
Right?
But to replace one of our other high schools, it would probably be that.
Probably similar. I
much. You're
mean,
not
yeah.
gonna build it for less. All right. The odds of a tornado hitting 2 campuses is probably lower, all right?
The greatest risk we have of that is Prairieville High with Prairieville Primary.
Right.
Next
right.
to, that's the, at least in my opinion, from
Yeah,
a
well
valuation
said.
standpoint.
Town, primary, middle, and high.
Yeah, you have that too, yeah.
Well said, well said. Well, what's the odds, right? Somebody knows. Person that gave us this book, they know the odds. of-
Oh, believe me, it gets back to how we modeled it last
Yeah,
year,
it's-
honestly.
This is a science, dude. Okay, and then we're talking about storm, I think is what we really debate.
Name storm.
So, wind damage, obviously there's always the water flood. I mean,
Yeah, because this has nothing to do with flood coverage.
not flood.
We have a separate flood
Yeah,
policy
you
for
know, Did the
that.
water come from the sky or come?
Yep.
We all know that. All right, so what is the biggest claim we've ever had for a hurricane deductible? Somebody said it was 11 million.
No, so Rudolph in 2009 was 10 to 12 million, right? And then Ida is situated about 4 to 6 right now. That's the two that we're having big claims on in the last 20 years.
Right. So, I mean, obviously you don't wanna.
No, and what you don't want to happen is, I think we probably all agree, we got pretty lucky with Ida.
Yeah.
Because if we would have been on the other part, like 25 miles further,
Lake Charles.
if it hits us. And so that gets back to the risk tolerance. How much do we want to take on ourselves? And how much do we want to pass on to an insurance company at an obvious cost? And we have to figure out, where do we want to be there? Are we comfortable at the 10 million? And if so, then great. Do we feel like it needs to be more than that? And if so, the next logical standpoint or step up is the 25 million. It doesn't make much sense to go less than that. And that's kind of where you are with it.
Right,
Just
yeah,
that
I
risk
think
tolerance.
last year when we were talking about this, we looked at
You looked at 50 as well.
15,
We looked at 10, 25, and
20.
50.
Okay, yeah,
Yep.
I remember we had a couple of tiers.
Yep.
Yeah.
I get it.
I mean, I'm thinking that where we're at today, you know, we got the ability to, you know, we do have some money in our fund that kind of can insulate us a little bit. We don't want to use it, of course, not for this. And then also there's the potential that FEMA could, you know, help you out if there was a real problem. And that go and add an extra 400,000 above the increase that we're sustaining because of the increase in total insured value. I'm comfortable with staying at 110 with the 5 million, 5%
5%.
deductible. That's definitely a no-brainer. But I welcome.
Bring Mr. Bourgeois.
Yeah, I just have, one comment basically, because we beat this thing to death last year and we're kind of doing it again. Bottom line is we need to know, it's $15 million of coverage we're talking about, minus 5%. So it's, take 5% off of that, that's your number. We're talking about, do we want to spend 350 something thousand, 360? Do we want to spend that to get that coverage? That's the bottom line. That's it.
Yeah, no doubt about it. That's the simplest way to look at it.
Beat this thing, do we want to spend $360,000 to get basically $14 million of coverage? We can, we do have funds to cover that if worst case scenario, but, that's on the committee right there. That's just my 2 cents. We can just, I don't know, we're running out of time, so.
Yeah, we are.
I can make a motion.
Okay, go ahead, make a motion.
I'll make a motion that we move forward with coverages of 110 with a 5% deductible, and bring that to the full board.
I second it.
Got a motion by Mr. Lambert, a second by Ms. Blue. Any other discussion? Well, that's where we'll send it to the board, and if they, what I would ask, Jeff, since not every board member is here, and Mr. Hughes, you can go ahead and take out that 7.5%, bring this to the board meeting in case, you say what we were talking about, because I feel like, we have 3 of the 11 that are making this decision. I would like us all to have those facts. Sound right to you? Motion passes. Second item, we need to hit it quick, my man.
Yep,
This one will be quick.
yeah, current boiler and terrorism coverage. So 2024 premiums were at $28,100, much lower than what we've been talking about, right? 2025 does have a premium increase. A lot of it has to do with the addition of Prairieville High School, about 5,918. And if you see the terrorism one, we declined terrorism last year, and so we're not recommending it again this year. That's, that's when the state and feds have to say it's terrorism and all that. So that would be your boiler, and that is recommended.
Just one thing to add on that, because I did get some clarification based off our meeting yesterday. The terrorism policy is a certified and also a non-certified act. So if it's not a federal declared act of terrorism, we could still have coverage for that. We didn't think that was the case when we met. I got clarification on that. So it's for certified acts and also for non-certified acts.
What type of coverage would that be? Like would be the dollar amount? How would that?
I mean, God forbid, but if a bomb went off at one of the campuses, currently right now, if that would be declared as an act of terrorism coverage or an act of terrorism by the federal government, we wouldn't have coverage for that.
Right.
If it's not, this policy would cover it either way. It doesn't matter. And it's up to $100 million of coverage, just like we currently have on the other one. You've always excluded it. I'll tell you, the likelihood I think is slim, but it's just something that you need to be thinking about. And I think y'all did decline it on the liability policy as well.
Right, did you find out on the deductible, was it per building, per campus?
Terrorism is a $10,000 deductible. Yeah, it's a $10,000 deductible, which is also a little different than what we call it.
We make a motion.
I thought you did. Ms. Bloom has made a motion to accept the recommendation of, Mr. Tyrone and our consultant.
I'll second.
Mr. Hughes. And a second by Mr. Lambert. We'll put this on consent agenda. Last item.
Make a motion.
Second.
Meeting is adjourned.
Thank y'all.
Thank you.
All right, y'all push me long as I've ever been. We still got 5 minutes.
Yeah, we finished early.
You talking about beer? Yeah, yeah, same.